Welcome back to the channel. In today's video, we're diving deep into one of the biggest transformations in modern economic history, a transformation driven by artificial intelligence, green finance, and digital money. This isn't a prediction. This isn't speculation. This is happening right now in 2025. Global investing no longer looks like it did 5 years ago, or even 2 years ago. The rules have changed. The tools have changed. And the winners of tomorrow will be the people who understand these changes today. So grab a notebook, because by the end of this video, you will have a clearer understanding of how AI is rewriting the laws of investing, why green finance has become a trillion-dollar macro force, how digital money, from CBDCs to tokenized assets, is reshaping capital flows, and most importantly, what all of this means for you as an investor in 2025 and beyond. Let's get started. The year 2025 marks a turning point in global finance. Three forces, AI, green finance, and digital money, have collided to reshape global markets in ways not seen since the invention of the internet. These forces are not isolated. They don't exist in separate lanes. They interact, they amplify each other, and together, they are accelerating a new kind of global economy. Let's break them down. How AI went from tool to co-investor. Just a few years ago, AI was something investors used as an assistant. Today, in 2025, AI is more like a co-investor, analyzing markets, spotting risks, generating insights, and managing portfolios with superhuman speed. AI-driven investment platforms can now process millions of data points per second, predict market movement probabilities with high accuracy, perform sentiment analysis across global media, generate customized portfolios in real time, adjust risk levels dynamically, identify early signals of economic shifts. AI doesn't get tired. It doesn't panic. It doesn't fall for hype. It doesn't get emotional during market crashes. This has created a massive shift. Retail investors now have access to tools once reserved for hedge funds. 2. AI market models, the new crystal balls of finance. Investors used to rely on outdated charts and human intuition. Today, AI models forecast commodity price trends, inflation levels, supply chain bottlenecks, corporate earnings, consumer spending patterns, even geopolitical risk exposure. Countries are now using AI models to set interest rates. Corporations use AI to optimize capital allocation. Traders use AI to analyze volatility in real time. The markets are becoming data-driven at the deepest level. 3. AI and predictive investing. One of the most powerful transformations is predictive investing. AI can now answer questions like, which industries will grow fastest in the next 6 months? Which company is undervalued compared to global benchmarks? Which assets will react first to changes in energy supply or interest rates? And unlike humans, AI doesn't wait for news to become public. It spots the patterns before the headlines are written. 3.4. AI advisors versus human advisors. In the last decade, AI wealth advisors have grown from niche tools to mainstream financial companions. Most investors today trust AI portfolios more than human advisors because they're objective, they're always up to date, they're cheaper, they're faster, they produce consistent results. Human advisors aren't disappearing, but they are evolving into strategic partners who work with AI, not against it. One. The green transition becomes investable. The world's transition to clean energy is no longer a future possibility. It is now one of the largest investment trends on Earth. Countries, corporations, and billion-dollar funds are all racing to meet net zero commitments, energy efficiency targets, emission reduction mandates, environmental reporting standards, carbon accounting transparency. This has created a colossal wave of capital flowing into green sectors. 2. What is green finance? Green finance refers to financial activities that support renewable energy, sustainable agriculture, electric mobility, water management, carbon-neutral infrastructure, clean technology innovation. It's not just about ethics. It's about profit, because sustainable sectors are now outperforming traditional ones in growth potential. 3. Why investors are flooding into green assets. 3 key reasons. Government incentives, tax breaks, grants, interest-free loans, carbon credits. Corporate demand. Companies now prefer green suppliers to meet ESG standards. Long-term stability. Clean energy reduces dependence on fossil fuel volatility. As a result, green bonds, green ETFs, and renewable infrastructure funds are being bought at record levels. 4. The trillion-dollar climate tech boom. Climate technology is one of the fastest-growing sectors in 2025. This includes energy storage, hydrogen fuel, carbon capture, smart grids, biodegradable materials, sustainable construction technologies. AI plays a major role in optimizing these systems, creating a powerful synergy between climate innovation and advanced technology. 5. Green finance meets AI. AI is now used to predict climate risks, model renewable energy supply, automate carbon credit trading, optimize energy manufacturing, identify next-generation green startups. This makes green finance not only sustainable, but data-smart. The age of cashless economics. By 2025, digital money has become a dominant force. Cash transactions have fallen dramatically worldwide. People now rely on digital banking, mobile wallets, instant payment systems, tokenized assets, central bank digital currencies, CBDCs. Digital money is no longer just a payment method, it is a global investing platform. 2. The rise of CBDCs. Central bank digital currencies were once experiments. Now more than half the world uses or pilots them. CBDCs allow instant cross-border payments, direct government-to-citizen transfers, programmable economic incentives, fast remittances, transparent transactional records. For investors, CBDCs have reduced settlement times from days to seconds, making global investing smoother and more accessible. 3. Tokenization of real assets. One of the biggest shifts in 2025 is asset tokenization. This means real assets, real estate, gold, stocks, bonds, artwork, farmland, can now be represented as digital tokens that you can buy, sell, or fractionalize. This allows investors to buy real estate for a few dollars, access global assets instantly, trade 24/7, avoid intermediaries, increase liquidity in traditionally illiquid markets. Tokenization is democratizing investing. 4. Crypto's new role in mainstream finance. Crypto is no longer a fringe experiment. It has become an institutional asset class, a hedge against currency debasement, a tool for cross-border transactions, a foundational technology for financial infrastructure. Stablecoins now facilitate billions in daily transactions. Regulated crypto platforms provide secure gateways for investors. Crypto has matured, and it's not going away. 5. Digital identity and financial security. With digital money, identity verification has become crucial. New systems allow for biometric financial signatures, AI fraud detection, real-time risk monitoring, cross-border identity wallets. This creates a safer, smarter, and faster investment ecosystem.